Hi, it's Charlie giving you Monday's market commentary. I hope you're very well. Just one bit of housekeeping to start off with. It looks like the new product launch will be at some point next week. I suspect that will be out at some stage next week, the new product. And just as a reminder, product is like an intraday type swing. So for people that can't sit in front of their screens for hours every day, but you have got the time to maybe log in on a few occasions, a few separate occasions based on time. So certain set times when all you have to do is log in then that may be perfect for you. And so it's a great little product where you just log in, check the charts on a few occasions each day, and if you get your setups on those occasions, then you get your trades, and you take those trades, and then you set it all up, set your parameters, and you walk away from it. So and those trades will run sometimes within a day, and other times they'll run for 2 or 3 days or so. But it doesn't really matter because you just set your parameters up and then walk away from it. So great little product, and so that's going to be out some point next week. Now, to start off with cable, and then we'll go into the stock market indices, and we'll look at the euro obviously as well, with the news that came out over the weekend on Cyprus. Now the pound remains, it's in buy the dips mode at the moment. So as far as I'm concerned, this is the daily chart of the pound. It had a great run last week, had some nice points out of that. And if I take us down to maybe a 4-hour chart, we are now officially in buy the dips mode. If we were, for example, to come down to the 4 hourly 50 moving average, then that would be a buy zone. And so it's buy the dips mode for the pound. So for you intraday traders or swing traders, then start looking at levels whereby you say, okay, you might be using Fibonacci, in which case if you were using fibs, let's have a quick look. Where's my tools gone? There they are. If you were using fibs, then you might be let's assume this high is in, and we're not going to go higher now, but let's assume that was the case. We've already done a 23% retracement, but 30, 38 and 50% retracements are down here. So fib people may look for those sort of levels for putting in buy orders. But you may disagree totally and say, no, I don't want to trade cable on the long side. But as far as I'm concerned, and my analysis is concerned, it remains a long side play at the moment. We've got 153.70, which is the monthly pivot, which would be my ultimate target. But obviously I will be watching this upper trend channel line as well if we were to get up to there. And also we have the 50-day moving average. So there's a few different levels there, but at the moment it's still in a reasonable area for buying before it reaches any major resistance levels. So any pullbacks, then that's how I'm treating that. So cable remains by the dips. We'll quickly go to the S&P actually before we go to the euro. And with the S&P, remains in that lovely upwards trend channel. I remember way back in December, January time, saying this is a nice wide trend channel. This could run for a long time, and so it has. Now we've gapped down on the S&P futures this morning on the back of the news, with euro and Cyprus, and so it has gapped down to around about 1540 when I looked at it last. Let's have a quick look. That is the futures though, so the futures is priced slightly differently. Yeah, it's at 1541 currently. I'm recording this at just before 10 a.m. So it's gapped down to here. So it's a case of, well, it's a gap. Is that a breakaway gap in order for us to go lower, or is it just going to get filled and then go higher again? Who knows at the moment, but again, we are close to those all-time highs, very close. We got last week, within 10 S&P points of the all-time highs from back in 2007. So it's just a case of whether we're going to do it on this run or not. But I must remind you that we have got, and I've been talking about it recently for a while, is that we have got this divergence in place with this line shows the percentage of stocks trading above their 40-day moving averages, and so we have got a bit of a divergence because obviously that peaked back in January, and since then we've got fewer stocks trading above their 40-day moving averages than, even though the actual stock market indices are higher within the New York Stock Exchange, we have fewer stocks participating. So it tells us that there's slightly weakening breath, and if we put it onto a weekly chart, you can see maybe get a better gauge. But it doesn't mean to say that it can't diverge a little bit bit more yet, or go higher and then carry on diverging once it gets higher. I would still love to see the S&P break those all-time highs yet, so we'll have to see if that's going to come through. So for now, watch that gap, see if that gets filled today or tomorrow, or if it doesn't and we start to run away from it, in which case that could constitute some sort of breakaway gap. So keep your eye on that anyway. But for now, I would still overall like to see the S&P go up and hit those. There we go, and hit those highs. Let's have a look, and it's the same sort of thing with the FTSE as well, actually. So if we go to, oops, we're done there. Okay, so if we go to the FTSE, take that out to maybe a monthly chart. FTSE's doing so well at the moment. I'd really want to see that come up to get to those highs as well. It looks like it's pretty much on the cards. Just a case of how long it's going to take to do it. Is it going to carry on going straight for it, or is it going to back off for a few months and then go up for it? We just don't know yet. So, but certainly that is very likely to happen at some stage, probably this year. Okay, right, daily charts again. Let's have a quick look at the euro dollar, because that's the one that's come down. It had a decent enough run. It was the price structure wasn't quite the same last week as cable, but it's had a pretty decent run up there. Hit the upper trend channel line of this nice channel that it's developed, and then got whacked obviously overnight when the currency markets opened on the back of the Eurozone news. And as you can see, this on the daily chart, it's having a bounce already from that. So let's take this into maybe an hourly chart so you can get a perspective of what happened. There it goes last night, and it's having a bit of a bounce there at the moment. So we'll see how that goes. But cable, I'm more confident on the long side at the moment. Euro, less so. Although as of Friday, it certainly picked up and was looking better for some more follow through to the upside. We'll just have to see what's going to happen here. The overall chart is quite sloppy, as you can see down here, and so it's got a bit of work to do to see if it's going to come up and attempt this trend channel line again. But at some point, all trend channels like to break out in the opposite direction at some stage. So at some stage it will want to break out of this trend channel. So certainly the more times you keep seeing it coming up for this trend channel then the more likely is that likelihood is that it's going to actually go for a breakout. Anyway, I shall leave that with you for now, and Kim will be back on touch on Wednesday.